Hi friends. So an individual means a person can earn money in many ways. We have different kinds of profession to earn, or you can have employment, or you can do a business, or there may be a other source kind of thing, means gambling, betting, some kind of other source things also there. So in these kind of modes you will be getting income. Fine. Now suppose you have a house property. On that also you will be earning something in the form of rent, right? In the form of rent. So it is also a taxable income in the eyes of law. So for that, to avail some, there are some exemptions to avail. Law is also giving some exemptions to the people, and so under this sections, how to avail the exemptions we will see today. Okay, we will see today. So income from house property is dealt under section 22, 23, 24 of the Income Tax Act 1961. We have one Income Tax Act 1961, and in which the procedure of calculation of income chargeable to tax and the exemptions and the payment modes to the government, everything will be contained in this act. Fine. Now you have a house property, and on that you are getting some income. Generally on house property income means nothing but rent only. So if you are getting that, what is the procedure to calculate the exemptions and to calculate the chargeable part? Okay, we will see now. To first to first to follow this, we have to satisfy some conditions. To satisfy some conditions, what are those conditions? The house property, the asset must be a building or a land appertinent thereto. Means it should be a building, or it may be as some land attached with the house. Means in a land, some portion it is a some house is built and some land is left vacant. That kind of thing also considered as house property. Okay, and the taxpayer the taxpayer should be the owner of the property. The taxpayer should be the owner of the property. Okay, it means because his house, so he has to pay the tax, he has to enjoy the benefits also. So everything whatever related to that, he will be having the one and only person who is having the total right and interest, right? Now, and it should not be that house property should not be used for his own business or profession. That house property should not be used for his own business or profession. If these conditions are satisfied, then the house property income will be calculated under these sections. So how to avail the exemptions and how to avail the other deductions, we will see now. So whatever rent, see generally we calculate the income on financial year basis. Means for 1 year slot we will calculate the income, or whatever any calculation will be for 1 year in India. Across the globe also that is there. Okay, fine. In India, I am talking about India. So it is for 1 year. Generally, we calculate everything. That we will discuss in another class. Why we are taking 1 year part. Fine. So here for 1 year, if you get some income, means rental. Suppose it is partly let out and partly self occupied. Suppose in some cases it is totally throughout the year it is let out. Different cases are there. Excuse me. So in different cases we will calculate. Suppose for 6 months only you got rent in that year, then your gross annual value will be for 6 months only we will take. But we calculate for 1 year. 1 year only we calculate the tax part. Though your income derived from that maybe for 6 months or 8 months or completely for 1 year. It depends on the situation. Okay, so for this also, for rental income also, there is a calculation. We will see in the next class what is section 23. 23(1). Excuse me. As of now, we are discussing the total income calculation, and each section will be discussed again in the next classes. Fine. So now the gross annual value means the total rent derived from this property in that particular year. That first we will take. This is our income, right? Income from house property for that particular year. Correct? Next. So whenever you have some income from some asset, obviously there will be expenditure also. So for house property, when you are taking some rent part as income, you need to pay some municipal taxes. Also, right? So taxes kind of things we'll deduct from this. If the municipal taxes paid by the owner, paid, not payable or pending or something else, if it is paid by the owner only, then only it can be deducted from your gross annual value, means income from rent, right? Income you are getting in the form of rent. So gross annual value means what? Rental income, and from that you can take deduction for municipal taxes actually paid by the owner, right? Okay, fine. After deducting this, what we call it as, this is called as net annual value, means net annual value after deducting municipal taxes. Fine. Now one standard deduction is given by the act, means in all conditions, standard deduction means in any condition you can take this deduction as predetermined, means it can be in minus, or it can be in plus, or whatever it may be, but this is a standard part. It is 30% on your net annual value. It is provided as a provision by the act itself. The value may be anything, but on this directly on net annual value you can take 30% as standard deduction. It is allowed by the act in all cases. Okay, I am talking about the let out property only, not the self-occupied property. If it is self-occupied, you won't be getting any rent, so no need of these calculation. The calculation will be different, that also we will discuss. So this calculation is related only for let out property. Fine. Now we have taken a 30% standard deduction given by the law. Fine. After that, one more part is there. See, in general, many people take capital means to purchase the house we will borrow some money, right? With borrowed money only generally 90% of the people will purchase the property, because it's for common people. I am telling, some people may purchase by investing total amount as cash, right? That is different part. Here we are talking about interest on borrowed capital. So interest, suppose you have taken some capital to purchase the house, so on that there will be interest, right? Every year or every month you have to pay some interest, so that interest also we can take as deduction. Okay, for this also there is a lengthy calculation, we will discuss in the next class. Okay, so after completing this video you follow that also, then you will be understanding what is the each section. Okay, so this interest also can be availed as deduction, and finally whatever you get, that is your income chargeable income chargeable to tax under the head house property. Fine, house property. So in the next sessions we will discuss what is section 24b, nothing but interest on borrowed capital, and section 23(1), that is how to calculate rental income per annum. Fine friends, follow my classes and please subscribe my channel. Thank you.